Hello, this is Robert Kiyosaki, and I'm really excited about this tape because it's the beginning of Cashflow 202, which is the advanced version of Cashflow 101. First of all, before I begin, I want to be clear on this, that Cashflow 202 is a completely different game than Cashflow 101. And so before we get into what Cashflow 202 is about, I would like to introduce my business partners. One of them is Sharon Lecter, who is the president of Cashflow Technologies, as well as my wife, Kim, who is my partner not only in marriage but in business. So, Sharon, would you like to say hello to the audience?
Thank you, Robert. It's a delight to be here, and I'm very, very excited to be part of Cashflow 202 as well as the entire company.
And Kim?
Yes, thank you, Robert. It's very much a pleasure to be announcing Cashflow 202. After 101 has come out, we've had a lot of requests for the advanced program, and we are now ready to unveil it.
So before we go on, I think it's kind of interesting that the three of us, as the owners and directors of Cashflow Technologies, in many ways we represent the diverse market out there. I was saying to Sharon and Kim that I represent the male factor of the group, the so-called, and that's why I wrote Rich Dad, Poor Dad, because my one dad worked hard all his life and wound up with nothing, and the other dad, who was my rich dad, he understood finances, and he worked less and less but made more and more as he grew older. Whereas Sharon represents the parents of the group. She's also a business professional trained as a CPA, so she speaks for that diverse group. And my wife, Kim, speaks for all the women out there, the modern women who are becoming more and more independent and less dependent upon a male taking care of them as it was in my parents' days. So, Sharon, you want to say anything about the importance of being a parent, being trained as a CPA, being a business professional, but also the education of children and what you represent as far as our market goes?
Certainly, Robert. Thank you. I think it's important for every parent to understand that it's their responsibility to prepare their children for the world that they face. And I think what's happening right now as we see the world changing around us, that other people look for the tools they need, and parents in particular look for the tools that will help them prepare their children for the world they face. And until now, I know I've been in the educational field for many years, and I was absolutely delighted to meet you, Robert and Kim, to see the value of the products that we have and to be able to help put those out there, that we can help parents not only teach their children, but help allow the parents to learn themselves.
Thank you very much. And when I met my wife, Kim, one of the agreements we had was that she wanted to be independent, she wanted to learn business, and she didn't want to be dependent upon me as, the cave dweller male goes out there and clubs a lion on the head and drags the food back home. She never ever wanted to be dependent upon a man's income the way my mother was. And so I'm very proud of her because as far as her own professional business development, I would say she has far surpassed me. And many times we joke about it is that if I was disabled or I was unable to earn any money anymore, it wouldn't affect us because she's able to carry on all on her own. So what would you like to say about the independence of women and the importance of financial education for women?
I think the old-fashioned attitude of a man going out to provide for the woman has been around and is still very prevalent today, although the times have changed and it's really no longer applicable. Women have become a driving force in the business world, and I really enjoy supporting women in learning investing and becoming more sophisticated in their investment skills. I think people in general love to be in control of their lives and especially their financial lives. So I really like to encourage women to learn about the game of investing, to be able to take care of themselves financially, to not become dependent on a man. Let me say that my relationship with Robert becomes stronger and stronger the more I learn, the more knowledge I attain, and the more hands-on learning that I do, which is one of the reasons I'm excited about 202. In the world of investing, there's a lot of jargon, a lot of vocabulary that may become intimidating, and what you're going to learn in 202 is new jargon, new language, new concepts that will enable you to be more in control and have a lot more knowledge and hands-on experience. So I really want to encourage women specifically to take control of their financial lives.
And so thank you, Kim, for that. I would like to definitely say she is a partner in life as well as partner in business. And as a male, I feel blessed to have two very competent women in business, making sure that I don't fall through the cracks, which I tend to do. For instance, I've seen a lot of men, they have this hard-headed idea that they're going to do it the hard way, go out, get a job, and work hard. Well, that was good in the industrial age, but today we're the information age. And in the information age, hard physical work is not the way of the future. It is, being able to think smart financially and business-wise. And so that's why I'm very proud to have two women as my partners in business. Before we get into Cashflow 202, I'd like to discuss Cashflow 101. All of us who develop the game highly recommend that before going on to 202, that an individual become well-versed in Cashflow 101. The reason, as I said, is because both games are entirely different. Cashflow 101 is a game that was designed for an uptrending market. In other words, it was virtually impossible to bankrupt yourself in Cashflow 101 because the purpose of the game was not to become a trader, but to understand the fundamentals of accounting, investing, and the language of accounting and investing and business. So it's called financial literacy. The problem with most people, and Sharon's a trained CPA will probably vouch for this, is most people are not financially literate. They don't know the difference between an asset and a liability or an income statement and a balance sheet. Would you agree with that?
Absolutely, Robert. I think what most people find is that they can manage their monthly checking account, but they don't have a basic understanding of their own financial statement. In fact, many of them have never prepared a financial statement for themselves. They don't understand the difference between asset and income. They don't understand the difference between a liability and an expense. And what the value of Cashflow 101 is, it allows them to really truly understand the fundamentals of the income statement, the balance sheet, and the interplay between them.
Kim, I'd like to have you talk about the value of 101, especially when we first met years and years ago and then got married, is some of the fundamentals you had to learn before you could manage a business in real estate was the actual numbers. Isn't that true?
Oh, absolutely. So in Cashflow 101, what's on that game board is basically everything that I had to learn in my life in terms of the income statement, balance sheet, in terms of all of the financial jargon, all of the numbers. Everything that's on that board is everything that I had to learn in order to become a businesswoman and an investor.
I think it's also important to add that within the game Cashflow 101, it's just not the board that you look at that's beautifully colored, highly colored. It's your actual game sheet that is where you truly learn the fundamentals. And when you have to adjust that game sheet, it is through that playing that game that you understand the relationship between assets and income, expense and liabilities. And that's so valuable. It's a wonderful opportunity for people to learn how to apply that in a risk-free play money environment.
As a CPA, wouldn't you say that's what most people don't understand is the relationship between the numbers and the asset columns and liabilities?
Absolutely, Robert. In fact, not just people who are not CPAs. I have several friends who are indeed CPAs and have, without exception, all of them have indicated that while we may have spent 4 to 7 years in school to learn our trade, they have learned additional strategies to help their clients. They use the game to help their clients. They've learned more by playing Cashflow 101 than they learned in their accounting school. It's an incredible tool.
Thank you. And representing the male faction of this group here, one of the things, a big mistake my dad, the highly educated PhD, my poor dad, every time he said to me, go out and get a good education so you can find a high-paying job, what he was telling me to focus on was what's called earned income. In other words, a paycheck or wages. Whereas my rich dad, what he said to me was learn to have money work for me so I didn't have to work for it. So what he was saying was not focus on earned income, but focus on passive income and portfolio income. So the thing that Cashflow 101 teaches is the difference between wages and passive income and portfolio income. I will say this much. What makes a person rich is not their wages, but more their portfolio income and passive income. So as well as teaching the fundamentals of accounting and some of the jargon of business and investing, Cashflow 101 is really designed to teach you the difference between earned income, passive income, and portfolio income. The secret is this. The poor and middle class focus on earned income or paychecks, and the rich focus on portfolio income and passive income. And that's what makes the rich rich. And that's what Cashflow 101 was designed to teach.
In addition, I believe, Robert, that also the portfolio income highlights the importance of the asset column. And that's what our business is all about, is to help people understand that they need to increase their assets, whether it be through portfolio income or through real estate or through owning businesses. I think it's important that they understand that the asset column is your future.
That's correct. And that's what my rich dad taught me. And so that's what 101 was designed to do, was the fundamentals of how the rich manage their money as compared to the poor and middle class. And so 101 was a nice, safe game that taught the fundamentals. So now we go into Cashflow 202, and Cashflow 202 is what the real investor really knows. For as my rich dad said, any investor can make good money in an uptrending market, but the true investor makes most of their money in a market crash or down when the market goes down. So what Cashflow 202 is designed to do is teach you how to make money in up markets as well as down markets. And as we said before, this is a completely different game. It's a completely different set of cards. And for those of you who have played, we recommend having played at least 6 times 101. But the moment you've done that, please forget about what you've learned and really begin to learn newly, because this is a completely different game with shorts or short selling stocks. Is how do you handle a stock that's high priced and be able to bring it down and still profit instead of crashing by it, as well as market volatility, which is handled by sophisticated trading techniques or tools used by professional investors called call options and put options. So in this game, 202, you will be learning the sophistication of it. And when you're learning the sophistication of trading and investing, you don't want to be still trying to figure out which is the difference between an asset and a liability. So if you're playing with somebody in this game who has never played 101, I think that's a mistake, because not only will you probably confuse them, but they will miss out on some valuable learnings in 101. But not only that, it'll slow the game down for everyone because there's just too much to learn if you're trying to learn 101 and 202 simultaneously. Would you agree with that, having worked in this game for so long now?
Oh, absolutely. 101 definitely, as Robert says, is the fundamentals. In 202, there is terminology and concepts of shorts, puts, calls, options on real estate. Within playing the game the first time, and it will take some time the first time because these are very sophisticated strategies, people who have beta tested this game walk away completely amazed at how much they learn in just the first time they play. Then as they go along, they get to apply those strategies in different ways every time they play the game. Every time the game is played, it's different. Wouldn't you say in your beta testing, Sharon?
Absolutely, Kim. In the last week alone, we've played twice. And the first time we played, I think we were able to get out of the rat race. The first person was out of the rat race in 42 minutes. And actually, I was a little afraid maybe it wasn't tough enough. And then a few days later, we played again, and it took 2.5 hours. The two games were absolutely, completely different. Same game, same cards, but the way that the cards were drawn, the way they interplayed on the game sheets, the ability for people to utilize puts and call options, short sales of stock. It was an incredible opportunity to see the game at work, and I was very, very pleased because I think what our customers will find is that while 101, after playing it 6 or 7 times, you feel like you have the master key and you can get out of the rat race very quickly, they're going to find a very different story with Cashflow 202. They are going to be constantly intrigued by the way that it will change every time they sit down and play it. And they'll also find different strategies and an incredible opportunity to grow and learn in a risk-free environment.
And that's what we'll bring in here is that Cashflow 202 has taken about 2.5 years to develop, simply because we had to bring the complexity or the sophistication into the model of it. So I really want to thank Dr. Van Tharp for his contribution to the technical data within this game, because it was Dr. Van Tharp who was also part of this tape series, and he's one of the top traders. He's been in Forbes magazine and Fortune magazine, one of the top traders, commodities traders in the world. But he's added the component of volatility in this game. So what Sharon is saying here is this, is when we designed 202, and it took a long time to come forth, was that we wanted to make sure every time you played 202, it was a completely different game. Sometimes when you play 202, it'll be the easiest game you ever played. And sometimes it'll be the most difficult game you ever played. And sometimes it'll be the most punishing. I mean, we've had games when we play this where people get wiped out financially within the first couple of minutes of playing the game. So what we really did with 202 was really make it as real life as possible, giving you different scenarios, which would mean you would have to come up with multiple options via which to solve the challenges sitting in front of you. In other words, real life. Because we've been sitting In one of the biggest bull markets in the history of the world, the economy has gone up and up and up. But as we all know, every bull market is followed by a bear market. And the saying of the financial traders is this: the bull comes up by the stairs and the bear goes out the window. And what that means, when the bear goes out the window, it takes a long time for the market to come up, the bull, but when it crashes, it comes down quickly. And so the point of 202 here is to give you the technical skills and understanding so you will understand how to handle markets going up, but most importantly, how to react when the market comes down very, very quickly. So as I said, each game in 202, unlike 101, is completely different. Sometimes it's easy, sometimes it's difficult, and sometimes it's punishing. But the more you play this game, the more capable you will be to handle the real world of volatile investing.
For example, in Cashflow 101, you'll remember that $1 stock. That $1 stock could only go up and up and up and up. People would bet the farm on that. In Cashflow 202, that $1 stock can now go to zero. That company can go bankrupt. So the strategies, again, will be different. Your real estate that you get in 101, you kept that real estate no matter what. In Cashflow 202, that real estate can be wiped out. So you're thinking all the time, you're creating all the time, and your strategies are always going to be changing with every game.
Sharon?
You're right, Kim, and I think also we can add that the game allows you to see the interplay between those various strategies and how one choice may impact the next round, another choice that you make. You learn the concept of cash flow versus capital gains. Sometimes you want the cash flow. Other times you may want to hold on to an asset so that you have the ability to increase the value of the asset by selling it later, therefore having a capital gain. And therefore you forsake the monthly cash flow. All of these concepts are thoroughly presented through Cashflow 202, and it's an incredible opportunity to learn.
So instead of having what most investors have when it comes to investing, when they buy a stock, it's called the buy, hold, and pray. That's all most investors know. They buy, hold, and they pray the price stays up. That is not called sophistication. That is called absolute insanity, especially in a volatile market. And we in America have been spoiled because we've had 10, 15 years of an uptrending market. What happens when the market starts to go choppy? That's when the real successful people will get, or sophisticated investor will get richer and richer. And that's what this game is designed to teach. As Warren Buffett says, the real investor welcomes volatility. The average investor fears it. And 202 is really designed not to say that you will become a sophisticated investor, but you will understand it. It will give you the basis. We don't recommend you go out there and begin trading shorts and options and call options and derivatives and all this, but you will have an understanding, a fundamental, basic understanding of how you can profit in up markets as well as down markets. If I could give you one tip right now, one of the biggest mistakes I see people make, and that word is called diversification. Well, people who say the word diversification really don't know what they're talking about, especially the people selling you those mutual funds out there. When they say you have a diversified portfolio, the reality is you don't have a diversified portfolio. Most people have only one asset class, and that's called a mutual fund. They may be diversified in stocks, bonds, and real estate and all this, but it is still one asset class. It is a paper asset. What Cashflow 101 as well as 202 have been designed to do is to teach you to manage three different asset classes. One asset class is a business. The other asset class is an asset class called real estate. And the third asset class is a thing called paper assets, which mutual funds are included in. The problem with most investors today is they're not diversified. They're actually diversified. And they're all diversified into one asset class called paper. And that's what's really frightening to me today, is because paper is the single most volatile market there is. And we have never had in the history of the world so many rank amateurs betting their entire financial future as well as their fortunes on something as silly as paper assets. If you want to be a successful investor in the real world and survive in 202, I would highly suggest that one of the things we designed into 202 was for you to understand the differences between the different asset classes, real estate, businesses, and paper assets. If the game becomes difficult for you and it begins to become a punishing game, the reason for that is because you're often only in one asset class. So I'm giving you a big tip here. Designed into this game is the way you handle volatility is not be diversified, but be balanced in three different asset classes, which is real estate, businesses, and paper assets. And that's another subtle distinction that was designed into 202.
I think that very distinction, Robert, sets our products apart from anything else available in today's market. There are games out there that teach real estate. There are games out there that teach stock market. But Cashflow 101 combined with Cashflow 202 teaches financial literacy and understanding of those three very asset classes you just discussed and how it interplays. And I think it's a very, very valuable tool, not only as a parent, but as a busy business professional. People who want to learn this information don't have the time to attend lots of seminars, or they have the ability to read books. Just by playing Cashflow 101 and 202 once or twice a month for a few months, their financial knowledge base increases tremendously, and it's a wonderful opportunity for a busy professional and a parent to learn quickly and provide the tool to help their children become prepared for what they're facing in the future.
And the beauty of 202, exactly what you're saying, Sharon, is that you can read about call options all day long. But in the game, you're going to read about it. You're going to have hands-on experience of trading them, and you're
while the market is moving, you'll be trading it.
While the market's moving, exactly, and you're going to walk away from that game with more knowledge. And more knowledge, as far as I'm concerned, the most exciting thing about more knowledge is it gives you more options.
And what Sharon was telling me earlier, that she's been playing this game with other CPA friends, and they're always shocked because you learn about call options, put options, and those things, but most people never really trade them. Isn't that true?
That's absolutely right, Robert. In fact, last week I was playing with a friend who's also a CPA, and she leaned over, and she didn't want anybody else to hear her say this because she felt embarrassed about it, but she leaned over and told me that she really enjoyed playing 202. She was part of our beta test, and she says, I know all there is to know about puts, calls, and shorts. She says, but I never really understood them. Now I understand them. Thank you so much. This 202 is terrific.
Yes, and for her, 101 was fairly simple because 101 is the fundamentals of accounting, so she was pretty happy with that. But when she got into 202, as many of my friends who are professional traders get into it, they really find it taxes them. They always learn something new, which is the value of a game. Number one, in this game, you're playing with paper money, and number two, it is a game. There's a multiplicity of factors being put in front of you. You're being required to look at the changing market as well as your changing financial statement, as well as use a sophisticated investor tool such as shorts, calls, and puts to make sure that your financial future comes out the way you want it to come out. And that's the value of 202. Play it as many times as you possibly can, because each time you play it, as we said, the game will be different. And in each game, you will be asked to balance between the three different asset classes: real estate, paper assets, and businesses. When you look in my financial statement or my balance sheet, what you'll find in there are real estate, paper assets, and businesses. I don't hold mutual funds in there. I don't diversify. Sophisticated investors do not do that. My big concern right now is that coming up in this huge peaking market, the trouble with a mutual fund is it only goes up. It has a hard time in a crash. And that's why all these fancy fund managers are standing on television right now. Oh, remember to invest for the long term, hold for the long term. The reason they're saying that is because they don't want you to pull your money out and destroy their mutual fund. Meanwhile, all the guys who are the traders, the hedge fund guys, they're licking their chops because this is when the rich really get richer, because they make more money in a down market than an up market. So that's the value of 202. On these audio tapes are what we call insiders. We call them insiders simply because they walk the talk. They're not talking about information they read in a book. They're not like regular teachers. These people are actually specialists, highly successful in their field. We highly recommend you listen to this tape several times because from them you will gain more of the balanced information you need. Instead of trying to be so diversified, you'll actually be balanced. You'll understand the fundamentals of business and investing and how they can support your future. The purpose of 202 is to allow people like you and us to take better control of their financial future via proper financial education. Anything else you want to say before we close?
Well, I'd like to just highlight your comments about the audio tape series that is included in 202. It is an incredible wealth of knowledge. I've learned a lot. As a CPA, you'd think I would know the basics of financial and financing a new company. And it's a wonderful opportunity to hear from the experts. And as I can't highlight enough your comment, they walk the talk. It's really wonderful to be able to have people who have been successful share their success, share how they made it, and they're tremendous individuals, and I think we can all learn from them.
And Kim?
I'd like to say thank you for purchasing Cashflow 202, for playing Cashflow 202, for increasing your knowledge, and for taking control of your own financial future. and as importantly for teaching Cashflow 101 and Cashflow 202 to your friends and your family. Thank you.
So in closing, I'd like to say I learned from my rich dad how to be a capitalist, how to be an investor, the importance of financial literacy, the importance of accounting, and the importance of running my business as well as being an investor. And that's what I learned from my rich dad. And from my poor dad, who was the PhD in education, I learned the value of education. And so I really thank you for Sharon and Kim. We thank you for being interested in your own personal education, because education is our future. What we learn today determines who we are tomorrow. The reason we design our products this way is because repetition is the way we learn. The more we repeat something, the more we learn it. So Cashflow is a board game. Play it often. The more you repeat it, each time you will learn something new, some distinction you never saw before. The audio tapes, play them in your car or when you're at the gym. Listen to them over and over again, because the more you listen to them via repetition, the more distinctions you will learn from some of these experts. So that's what Cashflow Tech, Sharon, Kim, and I are dedicated to do, is give you the best and most complete educational package that will educate you through your primary learning senses. So again, thank you for Sharon and Kim, and thank you for investing in your education. Hello, this is Robert Kiyosaki. On this tape here, which is part of Cashflow 202, we're going into what I consider a very important aspect of acquisition of wealth. We're building a foundation of wealth. And for those who have read my books, my rich dad said there was really a simple three-step formula for the foundation of great wealth. One was to build businesses, two was to invest in real estate, and three was to work through corporate entities versus working personally. So the subject of starting your own company, for some people and for many people, I would say it's a dream. Many people say, well, someday I'll start my own company or I'll start my own business. And the reality is most people never do, because it's a daunting task. And secondarily, those that do start it, I think the stats go, and stats, you can lie with stats also, but the stats go, I think 90% of all small businesses fail within the first 5 years. And of the 10% that remain, 90% of those fail in the second 5 years, or virtually almost all are gone by the 10th year. So for those that do survive, quite an accomplishment. So sitting in the room with me today are three other gentlemen who have been successful. They have formed their own companies, they've gone out on their own, and they've formed multi-million, couple in the billion-dollar range organizations. And what we're here today is to share more on the human side of it, the personal side of it, as to what it took, what they went through, what they learned, and words of encouragement, wisdom, and maybe some discouragement for other people. Starting a company is not for everybody, but it is a very good place to build wealth from. So with that, I'd like to have them introduce themselves first. Mike, would you introduce yourself and your company and what you built?
I'm Mike Wolf, and I've recently retired from a company that we started called Viasoft in the computer software business. My career spans about 25 years in the software business. Started early in my career working for a fellow fairly well-known Ross Perot in the Dallas, Texas area, a company called Electronic Data Systems, EDS. I consider Ross Perot probably one of the mentors in my life, my career. Not that I was particularly close to him, but he and the organization he created clearly was one of the foundations in my career. After leaving EDS, I went to work for a small software company back in Phoenix, Arizona called Capex. And we built that business up to around $16 to $17 million when we sort of came within the sights of another very, very strong entrepreneur by the name of Charles Wong, who now heads what we know today as Computer Associates, a multi-billion-dollar software company. And in fact, we merged those two companies back when we were both in the $16 to $17 million range. And as you might realize, Charles Wong went on to build the empire that he has today by doing many, many more, probably hundreds of acquisitions there. And I would consider him, if you will, mentor number two for me. So I learned a lot from his style, his organization. And if I came away with one key thought with Charles Wong, that no matter how big the company got, he always tried to make it feel small and made decisions quick and nimble, if you will. While at Computer Associates and running a couple of their software divisions, Leroy Ellison, the president of Capex, came to me on behalf of some venture capitalists and said, we have a new idea, a new company that we'd like you to look at the idea for. And I did, and on behalf of those venture capitalists, looked at it, decided it was a very interesting idea, perhaps the wrong tact, wrong folks heading up the organization. And to make a long story short, we picked up 4 of those individuals, moved them to Phoenix, Arizona from the Silicon Valley area, and started a new company called Viasoft, and that was 13 years ago. We drove that company from virtually nothing, where we had no revenue for the first year, to over $1 billion in capitalization less than 13 years later after a successful IPO in '95. So my software experience, again, over 25 years, led very, very quickly into the entrepreneurial area where, quite frankly, sitting around working for a company where you watched, in my case, programmers turn into millionaires seemingly overnight. Obviously, it wasn't overnight. Instills a spirit among you, and I think until you see success, you probably don't, learn, what it's going to take and what it's going to look like, what it's going to feel like, and that pushed us to go on and start further companies. I'm continuing that today, helping a half dozen other small software startups and a half dozen people or so range, both in the internet and non-internet area, try to achieve their dreams. So that's basically what I'm up to today.
Good. Thanks very much. The other gentleman is Hayden Holland. And Hayden, would you mind introducing yourself and giving a little bit of your background?
I'm Hayden Holland. I'm originally from Portland, now live in Phoenix, have a wife and 2 children. My business career, the inception was working for a company for a couple of years out of school, graduated from ASU. And
That's Arizona State University.
Arizona State University. I realized that after several years of working for a company that was not going to be the right thing for me. So with a partner started up a consulting company, and for a good 9 or 10 years consulted with business owners and other professionals, helping them with their finances involving estate planning, retirement planning, investment consulting, and so on. Through this, we always knew we wanted to find a niche. With the business that we were in was the trust company area. We found that our clients had the need for trust and custodial services and had a difficult time finding the right relationships to put with these people. And also talking to various financial professionals in the industry, that we were getting the same feedback. So we received our state charter trust company back in 1992 and built that up to what is now $1 billion, a little over $1 billion in assets, trust and custodial assets today. And the reason for our success there, I believe, is the niche that we did find. We were a local user-friendly trust company catering to the financial professionals in a way that no other trust company, from what we could find, had ever serviced that industry. Some more on my background. Have been involved in various real estate transactions and have purchased a number of different businesses over the years, and they've been oil and gas related to, as I said, real estate and so forth, and have just had a lot of experience with acquisitions and dealing with various people through the processes of acquiring and monitoring and managing these types of businesses. Recently, we've started up another company that primary focus is acquiring business receivables and financing auto purchases and leasing, and also we cater in the acquisition of non-performing debt. We feel like these are niches that we can fund and make very lucrative for investors, and that's it in a nutshell.
So you have multiple companies generally in the financial areas. Is that what you say your niche is?
Yes, that's correct.
And the next person is Bill Galvin, and I asked Bill from Dallas, Texas, to come and speak to us because he has quite a interesting story. And so, Bill, you mind introducing yourself?
I'm Bill Galvin, and I'm from Dallas. And my background is right out of college. I went to not sure what I wanted to do, like most college graduates. I just went and got a job, and that's kind of what the system teaches. And so I went to Houston and worked for a company in sales for 3 years and got quite an education doing that. And I found out after 3 years I did not want to be an employee the rest of my life. And my father has had a manufacturer's rep company for over 40 years. And so I decided to join forces with him. So moved back to Dallas and went to work as a partner in a manufacturer's rep company and did that for many years. And it's a great business, but like most situations where you're self-employed, you realize that if you don't show up every day and give it all you have, then you're not going to make money. It's basically you eat what you kill. And so about 6 years ago, I was exposed to another concept, another way of creating income in a residual fashion, and that's the network marketing concept. And I was skeptical, and I'm a very conservative person, but once I really checked out this system and the whole concept of duplicating yourself and creating a business that basically runs by itself once it's created, that attracted me because of my other business that I owned. It owned me, basically. And so the bottom line is I have two companies now. Both produce the same amount of net income to me. And so I basically double my income by creating another company on the side in my part-time hours. But there's a big difference in both those companies.
And that's what I wanted to have you talk about, because your family business, you said, was it 2 or 3 generations? Or
I'm third generation.
Third generation in it. And for many people, as I said earlier, their goal is to start their own company and then maybe someday hand it down to their children and all this. So here's Bill, extremely successful, coming from a very successful family business as it is, yet something inside the traditional structure does not agree, or you see flaws, and then you look for a different or a better system. And the reason I invited Bill here is because many people would like or have the dream of starting their own business someday. And what happens for many of them is they go from the employee mode into what we call the self-employed mode. And if you look at the tax structure, the laws and all that, the self-employed, which are doctors, lawyers, small business people, consultants, people in that genre, it is probably one of the hardest positions to be in, because as we're talking about, it's a day-to-day existence. You're only as good as you are today. The government taxes you at a higher rate. You have employee problems, customer problems, internal problems, and all this. So to survive in the self-employed mode is quite an accomplishment. So here is Bill. You did about $20 million last year.
That's right.
Very successful family business. You could have stayed there for the rest of your life. You've done well.
That's right.
For those who've heard my talks before, I always talk about industrial age businesses versus information age businesses. So here's Bill, who already has a very successful company, third generation, but he goes into network marketing, which is an information age type of business, because it's a business system, not you doing all the work by yourself. So would you mind explaining some of the insights and trials and tribulations you went through in making that decision, saying, here I have what most people consider success, yet I need to move on and look for a different system. Would you mind sharing what
Sure.
you went through?
Well, my motivation was, number one, my wife, we found out she was pregnant with triplets. And so that'll change your perspectives on how you think about your financial situation and, where you want to be 5, 10, 20 years from that point. And so that was a real wake-up call. And that was when I was exposed to the network marketing concept. I could have stayed just doing my manufacturer's rep business, and from all external views, I would have been successful and made a good living. But I realized that I looked at where that business was going, and it was just a business that kind of controlled my life as far as my time, and I wanted to create something that would free me up.
But also there were changes in your industry, i.e., you had one of your major suppliers was bought by somebody else, and even though you were doing a good job,
Right.
you still lost a contract.
Yeah, no matter, most businesses, there's so many factors out of your control. And one of our factors was we have 30-day contracts, and if a company that we represent decides to change representation, they can tell us, and 30 days later we're out of business.
Even though you're doing a good job for them?
Yeah, correct. It's just out of our control. So that didn't provide a lot of security for me. Even though that we've been around for 45 years, it creates a real fluctuation in your income. And so you basically kind of start over over and over again. And so
Every month you start over.
every month, but when you lose a line, you build it up, and then they can take it from you, and then you start that process over. So the networking business provided a business that you don't start over every year. You just keep building on the foundation that you've already established. So my ultimate goal was to create residual income so I could spend more time with my family and have more options and not just have my schedule controlled by trying to make a living every day.
So the question I have for you, we're speaking to people out there who might be considering starting their own businesses or are looking for insights as to what they could do better. A quick question I have is what motivated you to start your own business? If you could say there was one or two things that was a primary drive, it could be money or it could be freedom or whatever it was, but what was it that drove you to say, I'm going to let go of the security and take the leap?
Again, this is Hayden Holland. When I was younger, I had worked for a couple different companies, and maybe I was fortunate, but I worked for a couple of managers and bosses that I didn't really care for, and I came to quickly find out that I did not like working for somebody else, and was fortunate enough to, with another friend, form a company, a landscaping company. And I really, at that point in time, at a pretty young age, learned that I really liked the freedom of working for myself and felt very driven by knowing that the buck stopped with me and not somebody else. And so my experiences, I think, started very, very early, at a very early age. And ever since that landscaping company, I've just been very entrepreneurial ever since. It was like I was able to discover that other side. And it almost was not an alternative for me to go work for somebody else after that point. So that was kind of the start of my entrepreneurship. And so I knew when I got out of school that I was going to work for myself. I had a game plan in place. I knew that I needed to work for somebody first and gain experience and have the ability to put the financial resources together so that I could eventually go on my own.
So would you say the motivation was freedom then?
I would say it was freedom, and I would also say that I knew that by working for somebody else, I would never accomplish my financial freedom.
Okay. So Mike, what motivated you?
Well, I think we've hit on a key point here that I think most people who are probably listening to this think that this is all about purely generating wealth. And my personal philosophy, it was never about necessarily dollars and cents and generating wealth. It was more about the freedom. It was more about being able to have more control over my life and what I did. And it was all about not having to work 8 to 5. If I held up in relative importance of making a lot of money or working 8 to 5, clearly it was, I'd rather not work 8 to 5. I'd rather be able to go to my kid's soccer game at 4 o'clock and never miss one of those than make another dollar, quite frankly. But in order to do that, the freedom came as a result of, again, my philosophy was really optimizing my own resources. I want to optimize my time. I want to optimize the dollars I have. I want to spend them as wisely as possible, and I want to invest my time as wisely as possible. And I woke up and said, there are people that are a lot smarter than I am because I'm sitting here slaving, at the grindstone every day, and I see people around me that are making what appears to be wealth, but what I really saw was the ability for them to produce freedom. And so I said, I can do that. That's really what started me on the entrepreneurial spirit, if you will, in getting involved, starting companies, and moving to the investor side rather than to the employee side.
Thank you. Bill, what drove you?
I guess one thing, when I first started my career as an employee, I realized I'd never get paid what I was worth. And so I learned that early, and so that's why becoming self-employed, at least I was building equity, so to speak, instead of renting myself out. That's one part of it, was getting a better return for my time invested and having a long-term return. And then the networking business took that the next step, not only creating income, but also creating time. What's it all about anyway? On your deathbed, no one looks back and says, man, I wish I would have worked one more week. No, you look back and you think about all the options and the time you had with your family and doing quality things. And so, to me, the vehicle to creating quality of life is through becoming an entrepreneur and building companies that run without you having to be there all the time.
I would say for me, the motivation one was the mentor, the role models. I looked at, for those who read Rich Dad, Poor Dad, one was a school teacher who always said, get a safe, secure job, and the other one said, build companies. And I knew I could get a safe, secure job, so building companies was a challenge. And I thought that would be a neat challenge. So a lot of it for me when I was very young was kind of the glamour or the, before you know any better, because it's not that glamorous once you get into it. But it seemed glamorous, it seemed challenging. So I would say for me, a challenge was a big part of it, and to look at the role models, like, you look at Gates and never be as big as Gates maybe, but you still emulate. I mean, that's the kind of person I eventually, I have him as a mind, or Donald Trump, building big buildings and things like this. So part of it is who I wanted to become in the process of life. And secondarily, there's actually three reasons. Number two was I really disliked my boss. I had a job for 4 years, and I was in sales for the Xerox Corporation, great company. But the problem was I saw who was between me and the next promotion after a while. And I looked at my boss and I said, I have to become like him. In other words, to get promoted. And if you understand what I mean, you have to kiss a lot of what to get to where you want to go. And I said, that doesn't fit my MO at all. And I really don't want to do this. So I said, I guess I'm not going to be here much longer. And I had to get out after 4 years. But I think the clincher was, we've hit around it. We're talking about lifestyle or control or power or whatever you want to call it, the freedom. A big part was the freedom to design my life the way I wanted to work. In other words, what I really disliked about being an employee for 4 years, I was told what to do. I remember talking to my manager and saying, I want to travel. He says, good. Well, if you be good, do as you're told, and get your numbers up, someday we'll move you to Guam. And I went, what? To him, that was travel, being a sales manager of the territory of Guam. I went, well, that's not my picture of travel. It's too slow, it takes too long, and I don't want to do that. So a big part of it for me was the ability to design my life exactly to the kind of lifestyle I wanted. And so my wife and I love to travel, and we travel the world. But we do it on a business basis. So I have the power to create a business anywhere in the world I wanted to go. Like, we love Australia and Europe and Asia. And so we set up businesses and we can travel there. And so a large part of it was the freedom, not just for the money, but for the design of lifestyle. Is there anything you want to say about your lifestyle that, there's a give and a take to it?
I think you mentioned Bill Gates, by the way. I look at Bill Gates' life, and I'm not sure I'd want to be Bill
That's
Gates.
Correct.
I've watched the man. It looks to me like he speaks in a different city, virtually 3 times a week. So I would not want Bill Gates' life. On the other hand, clearly Bill Gates is not working as hard as he works, and he's one of the hardest working guys that I'm aware of. He is not working that hard because he wants another dollar. If he does nothing, I don't think he could spend the interest off the money that he has today. So what drives Bill Gates and what drives the next individual are clearly two different things.
I'd agree with that. What does it take, or were you prepared? A lot of times I talk to people and say, well, I'll quit my job when I have enough money, or I'll quit my job when I know enough, or I'll quit my job when my husband or wife says, okay, I can do that. But the question is, are you ever prepared enough, or were you prepared enough for the challenges that did come?
One of the things that I did out of school is I continued to have a backup source, since I was in an incentive industry of generating commissions and different incentives, that if you're going to transition to having your own business, that you have a backup source or a backup income. What I did to transition into going in my own business is I had a bartending job, and that allowed me to kind of smoothly going into my own business. It was nice to have that ability to fall back on that. And I think, like whatever business it is that you're going to go into, that you need to do the proper planning and have some safety nets in place just in case you do run into financial difficulties. Because again, once you do go into your own business, you're not going to get that paycheck that you're accustomed to getting. But you'll see the benefits down the road to not receiving that paycheck, of course, in my opinion at least.
As I had my manufacturer's rep company, it required a lot of my time. And so my challenge was time. And with about to have triplets and running this rep company, and involved in other things too, involved in my church and various outside activities, what I had to do was to start my networking business was I had to just create some time. The one thing about networking, and I don't want to sound like an infomercial, but it does allow you to create a business with very little money up front and do it in the few hours that you can give to it. And so that's what we did. I basically, the first step is to make a decision that I am committing to creating something, a new business. You make the decision, you commit to it, and then it's all about staying focused. And basically, I boiled my life down to a few major priorities. One being my wife and my new kids, my newborn triplets, and then my 2 businesses and my faith. And so I boiled my life down to that, and basically from that point it was just keeping all those priorities on my schedule and fulfilling my role in each of those, and not listening to the critics and the cynics that say, oh, you're working so hard, because you'll hear that. As anytime you venture out and leave the pack, so to speak, you're going to have critics. You're going to have people saying, you need to take it easy. You need to, not work so hard. But I was going a different place those people were going. I'm not being critical of them, but I wanted to create something for my future, and that means paying a price today. And I think that's real important for anyone wanting to make that jump, is they've got to understand delayed gratification, and they've got to be focused on their future.
I think it's real important that people understand that wealth is not an event. You don't, sort of achieve something and suddenly you are wealthy. In fact, I can honestly say I don't know, I'm not sure I could name a single individual that I personally know that thinks they are rich. Wealth is a continuum, and once you move up that continuum, you have a new set of peers that are all at the same level. You have new houses and new mortgages and new cars. And so what is wealth? It's anyone that thinks they're going to sort of do some one act and wake up one day and be rich. It's never going to happen. I'm not sure Bill Gates would characterize himself as rich, though he clearly has a lot of wealth. What you will see over time, though, is a change in your lifestyle. And if you're making the right decisions and optimizing your time, you will see your lifestyle change. You'll see the time requirements change, and your ability to prioritize, like Bill talked about, becomes your control, not your employer's control.